The market gapped down, opening lower this morning during Monday's trading session, nearly tagging the 575 strike on the SPY. We closed up just above 581, and actually here in after hours, we were trading at 582.12. So we've got a decent bounce going on here, back above the two largest gamma exposure concentration levels, which are both negative. We've been in negative gamma exposure for basically for the past week and really for about 90% of 2025 trading so far. Our lower dealer cluster zone is between 570 and 575, give or take. This has shifted lower over the last couple of trading sessions. We were basically concentrated around the 580 strike for a number of trading sessions before finally moving lower during today's trading session. So something to watch. A lot of negative gamma exposure has been growing at these concentrations between 570 and just above the 580 level. So one thing that I'm watching is to see if this small bounce that we got this afternoon can continue into tomorrow back above 585. That would be a pretty big level if we can get above that zone, and that would get us closer to that zero gamma exposure level. Flipping over to the S&P 500 itself, we've got quite a bit of negative gamma exposure between the 5,700 and 5,800 strikes. So this is actually looking just a little bit more negative than the gamma exposure on the SPY chart. We like to analyze these differences between SPY and the SPX just because a lot of times we have more institutional hands in the S&P 500 itself. And so in the options market, the gamma exposure can be very different between SPX and SPY. And sometimes that does give us the signal as to the skew in the options market. So as of today, the bias still leans slightly lower, at least from the S&P 500's perspective. One thing we're watching for with our Geeks of Finance members and in our community Discord is this zone between 5,700 and 5,800. If we do make another leg lower into this zone, this looks like a juicy buying opportunity from a risk reward perspective, and we're looking to potentially add some low risk, high reward trades in this zone. And so if we can get a bounce out of that zone, that would be an excellent entry point from our perspective. By the way, if you're interested in learning more about our trading strategy, you can check out our Geek University course. This is actually available for free to all of our members. It's a 5-hour option strategy, volatility, gamma exposure, and our overall trading strategy approach. 5-hour course, an excellent start to understanding gamma exposure and how to set up low risk, high reward type of trading strategies. I'll put a link down in the description below for you guys to check that out. So coming into tomorrow's trading session, we'll take a look to see how the gamma exposure data shifts throughout the day. We've got real-time updates. One thing that I keep noticing, and we've mentioned this in multiple videos, is we continue to see high volume coming in at the 6,000 strike. Now, this is undoubtedly call sellers in addition to call buyers at that 6,000 strike. That's going to be the predominant flow that we're seeing at 6,000. And so it's a little bit of a mix, but what's interesting is that this continues to increase the gamma exposure at that strike. So one of the things we were watching for is to see how much GEX grows at 6,000. And if this bounce continues, this could be a potential target heading into February. We're not there yet, but it is something we want to keep on our radar should a bounce start to materialize.
Thanks, Anthony. I wanted to bring attention to our Discord channel, in particular, one of the channels, the Zero DTE Trades, where we have a group of dedicated subscribers who are trading every day, a combination of their own methods with some of the data that we're sharing, which they've incorporated into their method. And one of the things we shared early this morning, within the first 15 minutes of the market open, we pointed out that the zero DTE gamma was negative, but we had the largest negative clusters at 5750 and 5770 SPX. That was very close to where we were at the time. And we simply pointed out, there's not a lot of upside for shorts at that point. And that based on the gamma picture that, we didn't have any major clusters above 5,800, but the big positive one that stood out was 5,840. And we pointed that out barely an hour and 15 minutes later. And sure enough, today's close was 5,836. So it's really helping us to navigate what otherwise is a pretty difficult market to predict if you look out 1, 2, 3 weeks in advance. So really grateful for the benefit this is adding to our process. And I did want to point out one quick thing on the VIX. We had highlighted in the newsletter, and I think it was Thursday's YouTube video, that VIX 22 to 23 seemed to be a potential upside target. We gapped up and opened up at 22 today, faded back down. The only thing I can say about this is that if the VIX can hold this 17 to 18 area, it might set up for another volatility spike. So we're not out of the woods yet by any means. So I'll be watching for the VIX and how it handles 17 to 18.
Thanks, Sean. Let's take a look at Nvidia. Nvidia trading just above 134, down from the lofty heights of 150 here at the beginning of the year. So we've basically been down for the first week and a half here in 2025. We have a little bit of a mixed picture from a data perspective. We've got large gamma exposure at the 140 strike and the 150 strike. However, we have quite a bit of volume coming in at the 125 strike and the 130 strike today, over 200,000 contracts at both of those strikes. But I would say all the volume that's come in at these lower strikes, this is going to potentially add fuel to the fire if we can get above the 135 level and hold above that level tomorrow and into Wednesday. A lot of these puts are short-term puts that were bought at these lower levels here. And so that's going to add fuel to the fire as those decay, as market participants are forced to close those out or to cut their losses on those put positions. That could add a lot of fuel, and we could see a rocket ship higher potentially if that takes place. Too soon to tell yet, but from today's action, it is interesting how much activity came in at these lower strikes. So it's something to watch for, especially if we get any kind of continuation in Nvidia. Another data point that I'll be watching tomorrow is the GEX, specifically at the 125 strike. If that level continues to grow and begins to supersede the gamma exposure we've got on the upside, that could definitely shift the balance for a continuation lower. So those are the two factors that I'm going to be watching coming into the trading session tomorrow to potentially take a trade in Nvidia heading into the end of the month.
Good points, Anthony. I wanted to pull up EEM, the Emerging Markets Index Fund, and you can see on the daily Keltner channels, which are the three blue lines here, it's very oversold. We're way below this. We're also below the whole moving average, which is a bearish sign. Generally speaking, I typically want to be short below the whole, but this is so oversold. I wanted to point out a potential contrarian play here. And to illustrate this further, instead of the daily chart, when we drop below or rise above the daily Keltners as an indicator, I try to zoom out and find the next potential area of support or resistance. So I'm going to go to the weekly chart here. And this is what kind of caught my attention. We're almost to the bottom of the weekly Keltner channel. You can see here 40.81 is the current price, and the bottom channel is right at 40. Interestingly, if you zoom out and you go back, you can see the bottom of the weekly chart. We've only been to the bottom of this once since 2022, and we almost touched it a couple of other times, but didn't quite make it. So this is rarefied air to be down here. And the importance of the weekly Keltners is that price tends to not reach these extremes as often. So anyway, it's interesting if we were to bounce higher, 43.61 would be retesting the middle Keltner channel here. So that's of interest. And looking at the gamma exposure, it is negative gamma, but it's at an extreme. And when we see the GEX intensity gauge, which is showing us the current gamma relative to gamma over the last 52 weeks, when it's this far below the negative side, it does potentially create a situation where we can see an oversold bounce very strongly from these deeply negative readings.
Thanks, Sean. Next, let's take a look at Tesla. Tesla trading up big in after hours, up to 409. Tesla closed around 403, so up another $6 here. All the gamma exposure above the point at which we're trading is positive gamma exposure. And so this move in after hours is very interesting. I'm looking at the upper dealer cluster zone, which is likely to move higher as this positive GEX begins shifting higher here on our data graph. You can see we bounced just off of our lower dealer cluster zone. This was just below the 380 area on Tesla. And so that has held as our lower dealer cluster. You can see we've kind of been bouncing around right around that level before the final move this afternoon. And so this support area could hold for Tesla, especially if we see a continuation tomorrow. I'm going to be watching the gamma exposure between 450 and 500. Do we continue to get volume and open interest growing at these levels up here? If so, Tesla could make another attempt higher to the mid 400s. That's something that I think would be pretty surprising to a lot of Tesla bears if that occurred. So that's going to be something we're watching for tomorrow. And I just wanted to highlight that both from a gamma exposure and from a volume perspective. And just a reminder, be sure to check out our website, geeksoffinance.com. If you're interested in becoming a member, you'll get access to our gamma exposure dashboard and our option flow analytics tools. You'll also get access to our premium channels in our community Discord. As we mentioned, we've got a ton of great traders in there sharing their own strategies and trades every single day. So you definitely don't want to miss that. I'll put a link down in the description below for you guys to check out. Thanks so much, everybody, for watching, and we'll see you guys in the next video.